Hi there, Serial Trader here. Let's check in with the major US indices. Starting off here with our shorter term Elliott wave outlook for SPX. So I've just made a couple tweaks to this overall short term wave count. Still working the 1-2-1-2 count, and that we possibly have a third of a third wave in progress. And of that third of a third wave in progress, I like that we got a 1-2, maybe a very, very extended third of a third of a third, and then peak there. Now we can potentially count an ABC down for 4, okay, and certainly a very non-threatening fourth wave, nowhere near overlapping with 1, and doing a fairly shallow retracement of this extended third wave, and now starting to come back up again. So perhaps a little more bullish short term here than I anticipated. I thought we'd have a bit of a deeper, more time consuming pullback, but that may not be the case. Now there are some other possibilities, but I'm kind of liking this current scenario, and I'll get to why I like that in a moment, but I'll also highlight a potential alternate. So if we do in fact have a nice fourth in place here, I would hazard to guess, we've come up in some sort of 1, we'll have a little 2, and then, we'll have a 3, 4, 5, right? 5 that'll complete a larger 5, it'll complete a larger 3. Now, nothing to say it ends in this area, but just to get a little visual picture, right? Yeah, hang on here. Okay, something like that. And if that's the case, we're getting up pretty close to all-time highs. Now, how close? Let's have a look. Yeah, we'd be knocking on the door there, just coming up in this third wave. So it could extend even further if it really breaks out and gets above the January highs there. But definitely favoring further bullishness here, any short-term weakness aside. But that being said, let's just explore the potential for, a further downward pullback, at least short-term here. So I'll just drag these away for now, as long with these, just to clear this up. Now you could also make the case that we have a 5 down and we're working an expanded flat up in a B wave, for instance. So you could definitely argue that, okay, we have some sort of 1 down, 2 up, 3 down, 4 up, 5 down, okay. So 5 down maybe for an A. And then we have a, I'll just get the A tool out as well. I suppose I could borrow the ones I already have out there. You could argue that we have this A up, B down, C up, okay? And then that'd be an expanded flat where you make a move up in A, make a new price extreme in 3 waves in B. So we had a 3-wave move down to a new price extreme. And now we're coming up strongly in a C wave, okay? You could definitely make that case. And you kind of have this 3-3-5 structure that an expanded flat would have. And you also could do a Fibonacci retracement off of the low here. And look at that, we're just basically right on that 618 retracement. Hang on here. Right on that 618 retracement, which would be very typical for a corrective retracement. And, you could say that this is going to be an overall larger ABC down or something, right? Like this. And let's just bump that degree up by 1 there. Sure, yeah, that works. So could argue this for now that we have an ABC still in development, and then we just have our 5 down, 3 up, and an expanded flat wave B, and we'll be coming down to C to make a deeper 4, going back to that hourly chart, to make a deeper 4, right? Now this is possible, but a little less likely, and I'll get to that. So I'll just leave this for now, and we'll go to the candlestick chart. So if you look at this, this is SPX daily. So today we did a massive bullish engulfing candlestick, engulfing 3 prior candles, real bodies, okay? A close well above the T line and the 3T line. So this is why I'm favoring more so that first scenario that I showed with the wave count, where we just are immediately going up in a new wave here, and we're going to take out the high soon, right? This candlestick buy signal tilts the odds towards that more bullish wave count, in my opinion. And if we just go to the Dow Jones Industrial Average, you can see that the Dow just came down, nicked that 20-day simple moving average, and then sharply rejected. Now we have a nice hammer buy signal, candlestick hammer. And we actually closed slightly above the T line on the Dow. So Dow looking like a strong reversal, going by the candlestick analysis. And the NASDAQ composite. Looking at the NASDAQ composite. And NASDAQ did a nice, well, you see it came down. Basically found support on this 50-day simple moving average. That served as support for the last few days. A couple dojis, and now we have a nice bullish engulfing candlestick, engulfing this prior doji from yesterday. A close well above the T line. So NASDAQ looking quite strong here. Let me try and get rid of that rogue bar there. There we go. Okay, and also this, so we've got our triangle wave 4 coming up in a new impulse that looks mature, although doesn't mean it's complete. And we have this Elliott final channel, okay, connecting these two significant lows. And we came down, just tested that along with that 50-day simple moving average. We came into that oversold territory on the oscillator, and now we're coming off of that. So this looks like a very strong buy signal as well. So I would favor the scenario where we're just going to come up basically immediately and take out the highs, as opposed to having a deeper pullback. But just be aware that it is still possible to have that deeper pullback. However, it just seems less likely at the moment. All right, looking at the VIX. And the VIX remains bullish for equities because it just can't break out. Every time equities have a little dip down. VIX barely gets up here. It doesn't even get above the 14s lately. And now it's just rejecting right back down to the low end of its range. So everything's looking relatively bullish here. So check in tomorrow after the close. Hopefully that's good for now. Serial Trader signing off.